Welcome to our large orders trading strategy video. In this video we'll be looking at the oil market, which is depicted here at this on the left hand side, this ladder over here, and the market is currently trading at 50.29. 19 lots bid at 15.29 with 28 lots offered at 50.30. So if you wanted to buy here at the market, you'd have to enter your position right over here at 50.30 at market. You could take as many as 28 lots at this specific point in time. If you want to sell the market now, you'd have to sell at 50.29, and those are your currently traded price. And as you can see, this is the depth of market. This is the order book on the buy side, and this is the order book on the sell side. So now we're going to be having a look at this video, and we're going to be looking at a large order trading strategy. So let's play. I'll be playing this at 4 times the speed so we can get through the crux of the video. So let me just, now what we have over here is a triple whammy crude oil front run play. So a triple whammy play because we are looking at 3 potential plays over here. Now the first one we're going to be doing is identifying a large order. At the moment you can see the order book is really the size of the orders on the order book throughout these prices is between 20 lots to around 90 lots on either side. So no significant large order that we're able to identify at this moment. But what we'll be looking for is a large order. As you'll see as I press play again on the video, you will have 3 strategies that we'll be trading here. Firstly, the front run explosive grab. So the moment we see that large order come onto the book, so if we see a large order come to the book, we can start positioning and start putting our orders just above that large order, between a 1 to 3 tick or 2 tick position above the large order, or if the large order comes on the sell side, 1 to 2 to 3 ticks below the large order on the sell side. Now for that front run explosive grab, what you're looking for is the moment you enter the trade, the moment you get filled, you want to try and enter it with a rather aggressive size, and you want to take anything between 1 to 4 ticks on the trade, or 1 to 2 ticks on the trade, depending on the genuine nature of the large order. A large order that appears out of nowhere in the oil market that's above 500 lots is generally on balance of average a significant order, especially when the market is moving around quickly. As you notice when you're trading products such as the Bund, and you see orders flashing in and out, large orders that are twice the size of the order book, sometimes those are not genuine orders, and front run strategies would not work. Now your reward management is, as I said, 3 to 6 ticks. Your risk management, what you're doing is, if you see a large order on the buy side, and say in this instance you saw it at 50.27 over here, what you'd want to do is ensure that you put your trade, the moment you notice a large order, you want to make sure you get optimum queuing. So if you saw a large order at 50.28, you'd want to then put your order at 50.29 and potentially 50.30. So the moment you see the large order, you front run that order, and the moment you get into the trade, you're looking for a quick reward a quick reward exit. So that's for your front run explosive grab. Now what we're going to be looking at in this example as well is the hit and run. So the moment the front run opportunity starts disappearing and the market starts trading towards the large order, so when you start observing the large, and we'll see this all in a very short while, but the moment you see that the market is starting to struggle to trade away from the large order, and the market wants to start trading the large order, what you want to notice is, as the large order starts disappearing, as the participants start hitting the say the bid in this instance, the moment the large order starts disappearing through traded orders, you want to get on the back of that, and it's called the classic hit and run. So as you see it diminishing, you don't want to hit it first up immediately because the market could still trade away from it, but as you start seeing this order disappear, then you're looking to hit it and automatically start placing some bids on the buy side. So you exit very quickly, because the moment that large order gets taken out, balance of probabilities, you'll get a blip towards the downside, and as you get that blip towards the downside, you want to start getting out of your trades immediately, and your exit, the environment on this again is you're not too worried on the environment, but ideally actually higher volume volatility environment. You want to see the order being taken out quite aggressively and quite effectively. Then what we'll be looking at, as this large elephant order has been hit, a lot of the times what happens, it blips through, and then you have a trading strategy what's called hiding behind the elephant, so the large order being the elephant, and as the market takes it out, you'll get an initial blip down, then you're looking for a bit of absorption play, so it's a trading strategy that we observe later on in the modules, but effectively, in a just quick summary, is just looking for someone reloading on the buy side. When someone is reloading on the buy side, then the market likes to come and test that price where the large order is effectively. So the moment you hit it, you want to be finding your exits and potentially looking for a cut and reverse, and you're going long and you're trading back towards that large order price that got taken out. So it's a whole, there's 3 trading strategies over here within that one genuine large order that you observe, that you want to keep a very close eye. Now, those 3 trading trades don't have to all happen at once. The reason why they don't have to happen all at once is simply because sometimes when you see a large genuine order, the market could just get chased all the way up the order book and never revisit that price, because the market's in a highly volatile, highly geopolitical occasion potentially, where the market is just finding one directional play, and there's the panicked brokers who are having to get away orders at whatever price, and they're putting in the large orders at whatever price, and the market just starts feeding off it like a frenzy and just starts trading away, and you actually don't have the other 2 strategies, such as the hit and run or hiding behind the elephant, where the large order just actually results in a market moving in one directional play. So now let's have a look at this video in real time, and let's really watch the order book very closely. So as you can see at the 25s, right there at the 25s, you can see a large order that has come onto the order book over here. So you've seen that large order that's come onto the order book. So what you're doing immediately, you want to put a buy order at the 50.26, because it's just come on in the order, and this is really an complete anomaly size. I mean, look at the difference between 2,077 lots at 50.25, and everything below that is below 3-figure digits. So really large, extremely large size. So you're potentially putting a bid at the 26s and at the 27s. So now let's have a look how this market really starts evolving and developing over here. So the market is trading above it. Now the market's obviously observed this, and it's trading a little bit, trading up the page. And as you can see, for the moment, that the market is moving away from this 50.25. So we're watching really closely here of how this market really how the market really observes this large order and what it wants to really do with this large order. So we're now trading 50.35 at the moment, trading 50.35, bid 34, offered 35. So this market is still trading about 10 ticks away from this 50.25 over here, and it's trying to move a little bit higher after seeing that large order, as you can see. So we're just watching this here, we're watching that large order, we're watching the interaction of all the other orders, observing that large order. Now the market's trading 36, now the market is trading 36, trading 35 there. Now you've seen the order, there's a new order that's moved up the book. So potentially, because this order is not getting filled, the person who's executing this order is having to now chase the market, so potentially has moved the order up the order book. And the moment you see that, you want to be getting some orders in at 36 over here, and actually going in at market at 37, so you'd be able to get 37. So the order has just increased, so there could be potentially a 2,000 lot still over here, but we've seen the market shift up towards really at market now, waiting to get its full at 50.35. So it's how the market now responds to this, and you'll get some potential front running from traders around the planet, putting some orders at 36 and 37, looking for leverage front run and potentially getting out for just a couple of ticks. So just front running this large order over here on the price ladder. So let's see how this now materializes as we start watching this 50.35. There's 520 lots here at market. So you can see at the moment you could 30, so it's gone up to 38, traded out 39. So already your front run trading strategy would have worked there for a couple of ticks, 3-4 ticks at the moment, 45 ticks at the moment. Now it's 2,000 lots. You can see that 2,000 lots. So are you putting some orders? Are you ready? You've chased orders. You would have been filled at the 37s and the 36 as the market trades up a little bit higher. Now we're seeing that the market is not escaping as quickly away from this order, but we are, if you are scalping around this area in front of this market, but it's not exploding up towards the upside. So we're keeping a very, very close eye if the market wants to come and gravitate towards this 50.35 and wants to start trading out this 50.35. So keeping a very, very close eye on how this market starts evolving and developing and how it wants to trade towards. And if we start seeing a potential hit and run pattern that will emanate from observing this. So we're just keeping a close eye on this. So we can see now we're trading very near the 50.35 at the moment, very near it. So we want to see if it starts trading it now, and if it starts trading it, we have a potential hit and run strategy in the making. So as you can see, we traded a couple of lots at the 50.35 offering down. So you'll see we're starting to trade a few more lots. But nothing significant at the moment. We want to see a little bit more size hitting this 50.35. It's still holding above, the 50.36. People are still buying or front running this large order. You can see now you can really see now that it's a genuine a genuine large order, because it's accepting being traded into. That's how you really start defining a large order. The moment you start seeing it generally being traded into or holding its ground and not flipping or disappearing, you know it's a genuine large order. So we're still watching. The market is still holding a bit at 50.36, and this market now is still trying to work out if it wants to trade out this 50.35 for the moment. It hasn't traded it out yet, so we're slowly observing this market, and I just want you to keep an eye. Okay, now let's keep a close eye on how this trades over here. So a couple of lots are hitting this bid at the moment. You can see a couple of lots more hitting this bid. We're watching it closely now. And then you can see, and this, remember, this is there we go. You just saw a couple of 200 lots. It's just taken 300 lots over there. So at this moment, you potentially, the moment we start seeing this, for me, my rule of thumb, if it's above 1,000 lots, the moment I start seeing the acceleration of the hit, I'm going to start joining this hit and run strategy. I'm going to offer into this. I'm going to hit the bid, and 300 lots got taken. So the moment this starts going below 1,000 lots and it starts going aggressively, I'm going to hit this. And the moment I hit that, the moment I sell into this order, I'm going to be putting a buy order, a couple of buy orders all along here, between 3 to 6 ticks. I'm going to be looking for that little blip down and just fill all my positions when I do go short. So let's have a look how this trades for the moment. So we're watching here. So the moment we see it trade below, okay, you can see it accumulating here. There we go. Quickly, it's filled all those trades. It's gone from 35 all the way to 28. You would have been filled on your trades, and now your next strategy is looking for looking for after the hiding behind the elephant trade. So you're loading up some bids between 27 to 30. You can see the market is absorbing between this 27 to 30 range. So you've loaded up some bids, and you're looking to exit again at around the 35s to 36 as the market starts gravitating towards where the blip started after that large order. So you start getting some longs away at the 50 to 26. So you've already cut in your reverse, and there we go. The market is blipped, all the way up. So as you can see, 3 strategies around observing a really large anomaly, large order. Not only can you execute on the front run, you can also execute on the hit and run, and then after the hit and run, you can cut and reverse your position, and then execute on the what we call the hiding behind the elephant trade, where as the large order gets taken out, it blips down, you find some buy side orders, or you load up your book and you look for a market to just start testing back towards where that large order got taken out. And that's really a great example of crude oil, the triple whammy play. These large orders don't happen too often, but when you see them, you have to optimize and profit from that trading strategy when you are faced with it.